All right, everybody, welcome here to show 176 on Crypto Voices. Matthew, your host here from Eastern Europe, joined by my buddy from Eastern US, Alec. Halo Privacy, as always. What's going on, Alec? Happy Friday.
What's up, guys? Happy Friday.
Very happy to be joined here with our special guest, Sina from 21st Capital today. Sina, thank you for making the time, and how you doing?
Hi, Matthew and Alec. Glad to be here. Thanks for inviting me. Excited for our chat.
Yeah, this will be great. So, lots to talk about. I've been enjoying the chats we've been having over on Dot Kruger's channel about the power curve and other things, all quantitative with Bitcoin. But, just really quickly before we get started, really briefly, how did you get into applying all of your quantitative analysis to Bitcoin?
Yeah, so let me see where I can begin and also be brief. So my day job is an empirical researcher, which basically what I do is I half of the job is teaching. I teach business classes, but the other half is research on business questions. And we collect data. We ask an interesting question, and then we collect data to address it. So that also means you got to have a lot of training on data analytics and econometrics and general data science topics as well, to be able to collect and clean your data efficiently, all of that. And then once and I think this happens to a lot of people, once you learn about Bitcoin, it consumes you and it becomes a very important part of your life. And then you begin thinking about, okay, what can I bring to this space? And for me, it was mostly my educational background. That's what I bring to our advising efforts to cleanly and clearly explain Bitcoin to our clients, but also bringing my analytics capabilities to understand what's going on in Bitcoin and intersection with economics. So I guess that's the brief version. But then that also got me interested in quant-minded people, and from there, I think I learned about Fred, and I was posting some of my discussions on the ETF, some quantitative analysis on the ETF, and then Fred picked it up. We began conversation, and from there, I got connected to everyone else in the power law world, and that's how it went.
So one of the things about Bitcoin, it's probably fun for all of us, though, it was such a green field, maybe a little bit less so now, but as you look at it, bringing discipline and mathematics and analytics to it, would you also say there's a bunch of like garbage analysis out there? Because, there's a lot of like hack trader commentary in the crypto space. And I'd love your professional opinion, because I see a lot of stuff that to me looks like clickbait.
Yeah, I love that terminology, hack trader. Yeah, so even trading, could be respectable if you treat it as a serious profession and learn the tricks and actually do it right, rather than just watching a bunch of YouTube things and drawing lines. But what we see on Twitter, as you said, it's a lot of stuff that seems nice, and unfortunately, there must be something wrong with the way social media is designed, that very dumb things actually get viral. And in fact, if you add more accuracy, after some point it improves, but after some point it gets saturated, and no one even gets that content, so it doesn't get amplified. Now, my biggest problem with the Twitter content in terms of finance is that people typically post charts that show some random correlation, and for going from two lines that appear to be following each other to a causal relationship between them is a significant work, is a significant project, which generally gets skipped. People just do a 2x2 chart and show two things that appear to be correlated, but that gives you zero information about what's going to happen in future. First of all, it's all about past, and second, you don't even know if the past relationship was real, a lot of things can just happen to correlate with one another, right? To be able to really say that something is driving the other one, you have to have much stronger analytics. You have to have also a strong theory that conceptually explains, the logic that these two things are related. But a lot of times people come up with a metric that's just literally derived from the price, like it's a derivative of the price. And of course, when you draw them on a chart, it's going to follow price wherever it goes, right? So then if you look at the past data, you see, wow, these two lines actually follow each other very well. So there you go, we got an indicator, we can begin trading based on it, right? So and it just hurts my brain.
Nice. Buyer beware. So how is power law different to pivot into that, and what is the predicate that goes into that makes it more valid?
Yeah, so let me begin from the one before, which was Plan B's model. I just said that how interested I am in data analytics, but when Plan B came up with his model, I was so disinterested because it really sounded like a made up thing. I didn't even try testing it, right? So I was like immediately immediately dismissed it as a made up idea, because again, we can get into it later, but it has major issues in both his application of the econometrics of it, but also conceptually linking just a supply factor to the whole to price. So I wish I had done it earlier, because I could have found a lot of interesting criticisms, which but instead I just chose to fully ignore him. And a while later, after I learned about power law, I realized, oh, this one is actually different, because first of all, the curve actually did fit, right? That's a difference. Like when you look at the Plan B's model, and if you run some tests on it, you see that it's another one of those cases that it looks good on the first chart, but if you actually run it through some tests, you see that it doesn't fit. For example, what you can do is you can create the same model on half of the data, say all the way up to 2017, something like that, and then see if it actually does continue to predict correctly from 2017 to now, just because we have that data, right? We don't have data from the next year, but we can prevent the model from seeing the recent data and check whether the model can extrapolate to the recent data. Okay, that's a very simple way to check the fit. Now, Plan B's one just fails spectacularly. Like if you eliminate last cycle, it would predict something like $1 million for now. And going back to my criticism of social media, actually, this might have been the reason it's successful, because it just gives astronomical predictions. But when it comes to the power law, you can run a ton of different tests. The curve is a very good predictor of the price trajectory. So for whatever reason, Bitcoin has followed a power law curve. Now it might be slightly different as time goes on, or depending on which cycles you want to which days you want to include or not, but generally the power law model fits very well. One of the things I personally did before I kind of believing in its accuracy was, let me just bring up my chart so I can and I'm just going to talk about it, no need to show it. So what I did was I created power law models just using pre-2016 data. And that model predicts 66,000 for today. So the model has not received any data after 2016. So you just fit your model there, and then you extrapolate the line to today, and it gives 66,000. How many years later was that? 4 and 4. 8 years later. So how is it that 8 years ago you could have come up with an equation that continues to predict a financial variable that's very complex, and it goes in all different directions and extremely volatile, and all kinds of all kinds of interesting things happen to it all the time, right? How is it possible to develop a curve 8 years ago that gives us an accurate prediction today? It's mind-boggling. So there is this technical side of it, that just the curve works. Okay. Now, whether it will continue to work in the future depends on a lot more data points. One of them is you need to have a much better explanation of why this is happening. Okay, and in the academic world, they call it the causal mechanism, right? So you have to explain why are we seeing the relationship. Just you want to give yourself a stronger chance of being right in the future. So having a tight logic is one of them. Now, when you look at the power law work, you also see that there is some good explanation. First of all, when you look at networks, if you think Bitcoin is a network, networks are supposed to follow some version of the network growth models, or Metcalfe's law, or growth patterns that follow a power law curve. So if you think of network growth, typically the power of a network to bring in new people is a function of what? The size of the network, right? So if Bitcoin was only Satoshi, he probably had a horrible time converting the first person, and Hal Finney, I guess, and the two of them had a much easier time converting the third person. And then when it was a small group, a lot of people ridiculed Bitcoin, so it was really hard to expand adoption. But now that even BlackRock and Wall Street are on board, a lot easier to even onboard super skeptic boomers, right? So the network's power actually increases as it becomes bigger. Now that pattern, if you actually run the math, it turns into a power law formula. So it makes sense on that level. Also, you can trace back the growth of Bitcoin to the growth of addresses. If you look at addresses also grow as a power law in time, which follows the same discussion of the network tier. Like the number of people that join a network are a function of the size of the network today. And then you can also come up with a precise relationship between the size of the network and the price of the network. So it's a power law with the power of 2. So my point is, you can even explain why Bitcoin's price follows such a regular, like crazy regular pattern. And that comes from the fact that the number of addresses, the number of users grow as part of a network. And following the Metcalfe's law, you can extrapolate from the number of addresses to the price. And number of addresses make a lot of sense for predicting the price, because more people joining, more money comes in, right? And of course, there are a lot of issues with number of addresses, because you don't know how exactly that maps to number of people. But as a rough proxy, that's all. As a rough proxy, it works. So I think what really was interesting to me with the power law model was that it technically, and on the regression side of it, really does fit the data. But also, people in this world have done a lot more detailed work in understanding why this is happening, and tracing back all these growth to the growth in adoption and number of users, which all makes sense. Now, the exact mathematical relationships between them, that's a place where over time those can change, but the general pattern is well explained here. The only thing I might give some caution to people is there's always room for models to have errors and not exactly pan out in the future as you expect. We've done the best we could so far, but you never go over, take a lot of risk based on a great model, right? So you always have to include some percentage of chance that future will be different for whatever reason. So you don't take extreme leverage. You don't take You don't bet your life on this model panning out in the future. A lot of people did that with Plan B. His price targets were, people's liquidation levels, and and when it didn't pan out, huge plans were changed.
Yeah, excellent points. Uh, can you explain in layman's terms the proportionality of the power law? Because I think, and you were alluding to it, but I think that's an important component of people to understand. Like with Metcalfe's law, when it's Satoshi and Hal Finney and just a few other people, it's smaller, returns are a different level. And then when you get larger and larger, how does the proportionality play into Bitcoin's network growth and then also market cap price growth?
Yeah, so power law has this interesting property that, well, first of all, the equation is like your y, your dependent variable, equals some alpha times your x variable times a power. So when you're explaining price as a power function of time, that's where you get a power law curve. And the term law in there is, it's just perhaps some naming thing that people have to change. You can call it a power regression or something like that. Some people
Yep.
get confused. Is it a law? No, it's just a regression.
Yep.
Now, then that same equation, if you actually do the derivatives and play with the math a little bit, you see that it actually implies constant elasticity. What do I mean by that? So that that's kind of economics jargon. That means every X% in growth of time should lead to some Y% growth in price. I looked at the actual price data of Bitcoin and I figured out that this is different ways to explain it. But one example of it is what I call 640 rule of Bitcoin, which says for every 40% increase in age, the price has gone up by 6x. Okay, so, and remember, this is 40% increase in age. So in the first few days of Bitcoin, like another week could have been 40%. But right now, which where we are like at 15, are we at 15 years?
Yep.
15 years.
Yep.
Another 40% would be 6 or 7 years later. 6 years later, right? So the value of 40% increases, but it's always 40%, and every time it has caused a 6x in price. So that's an interesting rule, but it's all a mathematical implication of a power law curve.
Right. Very interesting. And I think just very good to keep explaining these things, in layman terms. I've talked about it a lot as well. And it's obviously different than an exponential regression, because exponential regressions, those are constant returns over time. And that is actually what most of the financial world does, simply because of compound interest. And this is what banks use, and this is how the economy grows. So it's actually it works differently than most of the financial world today.
Well, that's because, an exponential thing quickly, it's too fast for our world, because if you just compound it a few times, it explodes in value and quickly exceeds all the possible value in the economy, right? But the reason it doesn't happen is that fiat money also expands exponentially, and that's in the hands of human beings, and they can let it go as big as you want. So the nominal value of many financial instruments actually does grow exponentially. But I suspect if you convert it into real value or purchasing power or inflation adjusted, something like that, then it probably behaves differently. And because the overall value in the world, just cannot keep up with how fast the stock market or other things are going up. So it's either gonna slow down, or most of the gains are fake, just nominal gains.
Yeah. And that exponential curve can change as well, like the slope of that trend as well, it can change. But it's interesting, at least for now, as you mentioned, and I've observed this as well, is the Bitcoin power regression trend line is pretty consistent from 2016, which is a wild thing to look at.
When I was younger, people told me that if you put, I don't know, $100 a month in the stock market, or was it a week or something like that? You can check this many different ways, but
Yeah.
you put money consistently into the stock. After 30 years, you have 1 million.
Right.
But what they didn't tell me was that 1 million after 30 years would be worth nothing. Probably can just buy a car.
Yeah.
And so a lot of the gains that we see in the financial world is all fake, and it's positive because the alternative would have been losing your purchasing value. So it's still a smart choice for people that don't have anything else, but it's important to know that you're barely keeping up with inflation plus a few percentages for the corporate growth. So when you think in those terms, it's kind of a it's kind of a it's kind of a game that doesn't really return much. It basically allows you to keep up with inflation, right? So they created inflation for us, but then they created this whole casino that we can go invest in. And if you're super super strong and successful, perhaps we exceeded by a few percentage points. And because we also know that the important major purchases in life go faster than the CPI in terms of price appreciation. So maybe even if you think in that terms, like in terms of real estate value, your stock gains are even less impressive.
Hope you're finding these videos creative and to the point when it comes to navigating the rough waters of the financial system. And I'm happy to share with you a platform that can do the same when it comes to getting a loan secured by your Bitcoin, and that is Debify. Debify is a non-custodial, Bitcoin-backed lending platform designed for people who want to borrow against their Bitcoin while maintaining full control. Debify offers institutional-grade liquidity through independent lenders, allowing for high-volume loans of up to 5 years. All transactions are secured by a unique multisig escrow system, ensuring that Bitcoin collateral remains safe and transparent. This setup guarantees that your Bitcoin is not rehypothecated, and you keep full visibility and control throughout the loan process. It's perfect for those who value security and transparency while exploring global stablecoin and fiat lending backed by Bitcoin. So head on over to debify.com today to get started.
But that's the world we live in. Yeah. But so my point is, like, the power law of Bitcoin might appear to be kind of slowing down in returns, but those are real returns, right? They're not fake nominal numbers. So Bitcoin, it's very difficult for anything else to kind of outperform Bitcoin over time. Bitcoin on a long-term basis, there might be some AI explosion that happens, and some of the stocks like Nvidia or other ones grow faster than Bitcoin, but they just can't keep up because Bitcoin follows the total value in the world. And if, say, AI doubles the value in the world, that should also double the value of Bitcoin, right? So it's easily one of the best performing assets, best places you can invest in. And yes, the returns should go down and will go down because guess what? You got in a little bit later than others. So anyone that gets in later, mm, you know, has so many people front running them, right? So you get a smaller performance, but nevertheless, it still is larger than many other asset classes.
So I have a question though. You said Bitcoin follows the total value in the world. Can you explain that a little more?
Yeah. So if you think of an equation, total value in the world should equal total money in the world. The whole point of money is to mirror the value, right? Money itself is useless. It's only used for exchanging it with the value in the world. So if the economy of the world improves very fast, you either get chaos, or the money supply or the value of money would also increase to match it, right? That's, for example, where we get deflation, right? If you which they don't let us have it. But if you leave the economy to its own devices, the economy just grows. Every one of us get more productive. Instead of producing 10 mugs or 10 computers or 10 cars, we make 100 of them. But if nobody messes with money, right, we have so much more value and the same amount of money. So every unit of money will buy a lot more, right? So value of money always reflects the other side of the equation, which is the total wealth in the world. If the wealth increases, your money just buys more. Now, Bitcoin, even though it's still not a global money, it's a valid, reliable, and growing money, right? So if it reaches the place where it's one of the one of the major international currencies, and you can argue it already is, but it's still growing. I would characterize it as still an infant money, but once it's adult, it will grow exactly as the global economy grows, because anything more than that, it just would be mathematically impossible, because Bitcoin has to buy something. That other thing is only growing at 2-3% a year, and you're not changing supply of Bitcoin. Maybe temporarily, like when people get very conservative or very animal spirited, you get some fluctuation, but on average, it will grow exactly as the world economy grows. But from here to there, we have many decades. So before that point, we are growing on like a startup, right? We are just following a rapid network expansion pattern, which is awesome, because even at the final stage, you're getting nominal growth. If all that expansion, all that explosion of Bitcoin is gone in 50 years or so, in 100 years, what you get at the end is equal growth compared to the world value. So it will be the true store of value, meaning the value you put in Bitcoin always buys a portion of the world economy. If the world economy grows, your share grows. It's kind of like a share in the world. It's kind of a stock. you own a piece of the world, right? But from here to there, we also have all the early adoption, explosive growth. So the process is amazing. The end game is amazing too.
Yeah, well said. And you can put that in concrete numbers as well, right? So even just not looking at the changes in the actual returns if you bought Bitcoin at 10 cents or whatever, but if you just looked at the power law curve, it would be hundreds or thousands of percent at the beginning, but it's having that asymptotic increase, a little bit, lower increase every year, as you mentioned. Now it's about 45% per year compounded, but that will decrease more. So I don't know if you have any further thoughts just on that observation.
Yeah, perfectly said. 46% right now, and in a few years it's going to be 40, a few years later 35, but it's not going to go down like to 10% anytime soon, right? So it's still amazing. And to people that say this is bearish, I think I've already answered them, but that's the reality. If you want more, well, you probably need to live in a different world. Our world lives on a power law, so you can't indefinitely compound anything. So yeah, I'm happy to take 40% a year for a couple decades.
Good. Well, let's. I think we can probably move on then from the main overview of the power, which is always interesting. What about some of your latest metrics and research? I understand you're doing a newsletter now, and
so one thing I can just directly link to the power law is power law gives us an average, right? Most regressions actually give you an expected value in the econometrics jargon, or average. Like at any point in time, the assumption is Bitcoin can follow a normal distribution, and it has fallen on, what's today's price? Like 60, what is it? I didn't check.
yeah, it's
60
some at the moment of recording.
Yeah, so in fact, a regression
62.
model says 62.
About.
In fact, the regression model says it's a range, and whatever the power law model predicts is the average of that potential range, which may not be exactly on the actual price, but hopefully your model is good enough to kind of track that closely. So, but on any day, you might be away from the average by some amount. Now, I took all those deviations and turned it into an index. Okay, so essentially that index tells me if the price is under performing the power law average prediction or overperforming. In other words, is it under what the model predicts or over what the model predicts? Okay. Now, again, because the model does a good job fitting, you get half of the time, almost half of the time, roughly speaking, it's higher than power law, half the time lower than power law. Actual numbers are a little bit different though, but you can analyze those deviations. Now, whenever you get into a bubble and you get to close to the peak cycle peak, you see that the price deviates significantly from the power law model. That's a great indication that the natural expansion of the network does not imply such a high price. And when that difference increases, it kind of acts as a stretched string, which at any point in time can bring back the price to the power law. So it's basically a bubble. It's a classic bubble formation mechanism, a self-reinforcing cycle of people getting too exuberant and risk taking, and that pushes the price too high, and that causes a lot more risk taking people to join, and it just compounds on itself until it runs its course, and then you get the peak of the cycle and the price comes back to the power law. But if you come from a huge number to a very low number, people are injured and depressed and sad and dead, and Bitcoin is done, so they're ready to even sell a lot more than they should, and the price goes below the power law. Okay, and that's a wonderful place to actually accelerate whatever you've been buying. And you can also see that when the index we create goes negative or below some average level that you've decided. Now, typically in all of the previous cycles, there has been some limit to how low or how high price goes versus the power law. So if you gauge those maximums and minimums, you get a much better sense of how close we are to the top or the bottom. The only problem with that is this raw approach does not consider that the Bitcoin's nature changes from cycle to cycle. Volatility is going down. So in the first cycles, Bitcoin has been deviating a lot more compared to a power curve or power average. In the later cycles, it has consistently deviated less and less. So you shouldn't kind of naively model everything after the prior cycles. Instead, you have to consider the changes that happen over time. So the other thing I did was that I corrected all these changes by a model of volatility. So I realized that every cycle volatility has gone down. I created a model on it and corrected all these deviations by that. And then once you do that, you realize every single cycle, Bitcoin has gone up. Like in my index, every single cycle at the peak, Bitcoin has been at 90% or more of an index, which I call volatility adjusted power law index. It's a power law index that's adjusted by volatility. And every time we get to a peak, it's in the range of 90 to 100. Every time we get to the bottom, it's in the range of below 20. So the metric ranges from 0 to 100. And 50 determines we are exactly at the power law prediction. Above 50, we get into a bubble. Below 50, we get into the oversold territory and so on. But we kind of more or less capture the maximum deviation that can happen from a power law. So that's the basis for my VPLI index.
And where are we right now?
We are undervalued. We are at the number 39. And again, 50 is our average. We are at 39, which indicates the market is cool. Even though, with all the growth that has happened, we are still in the cool territory and no real bubble has begun, right? So all we did was that we went down to 16K after all those collapses of the last cycle. After we get to 16K in the last cycle, we and the news about ETFs came along, and it brought tremendous amount of money and just brought back us up to the fair value. And we're actually, even because we've been crabbing in the last few weeks or months, we are slightly even underpriced. So nothing is in a bubble, no cycle peak is in, and just keep on stacking.
That's always good advice. So is there anything that would invalidate the model?
If the future price, so the model says it's a curve and it's a simple equation. You can extrapolate it into future. If the future values deviate from it significantly and stay there for some time, because the small deviations are fine, it's all expected. But first of all, deviations that are bigger than the deviations we've seen in the past. Also, if the future trajectory is significantly different, and you can actually measure that difference in terms of the significance, statistical significance. But it's all about, if the future doesn't follow this curve. Like, for example, we just said that we expect 46% average growth for Bitcoin. If it continues in the next 4 years, if it only grows by 30%, something is wrong. Or if it grows much faster, 60%, something is wrong, right? But a little bit deviation from this is fine. Now that's before you adjust the model. Because if you follow plan B, every time the future prices deviates from his previous prices, he comes up with a new model. And that's when you reset the game and you kind of remove all the losses. But you have to stop at some point and, without updating the model, evaluate future. Then if there's a difference between the real prices and your predicted prices, that's a clear sign of failure.
And what are your deviations at the moment? Are you looking at, daily vol over a monthly period or yearly period? And maybe you could give examples of what it used to be back in 2011 versus now.
Yeah. So what I do right now is just daily, because you can, parallelize an equation. You can even do by seconds if you like.
Yep.
But at this point, I'm doing daily. And just to give you a gauge, Power Law average price is $78,000 right now. 78. We are at 60K. So even though people are frustrated that we are slowly going down, we're going up and down, but every time the tops are actually lower and the bottoms are lower too. It's very frustrating. Some people call it chopsolidation. It's consolidation that also chops you and injures you by 1,000 cuts. But the fair price is going up, right? So the network is becoming more and more valuable every single day. More people realize Bitcoin. Every one of those ETFs, every one of those Wall Street big boys with big bags are going out and converting more and more non-believers into Bitcoin investors. Several copies of MicroStrategy are coming online. There's MetaPlanet in Japan. There is, a retirement funds, the Wisconsin retirement accounts, and several. Semler Scientific is trying to also be a mini sailor in the U.S. Many governments are trying to adopt. So all these things are happening under the surface, even if the price isn't going up, and that improves the fair price, right? So it doesn't really matter. It's just some kind of debt. It's kind of temporary slowdown in the process, but the fair value goes up and the gap increases, and at some point we will catch up. And I don't have the exact numbers in the previous cycles, but if you look at the first cycle, Bitcoin went up something like 5 times more than it goes up or down versus the Power Law in this cycle. So it's just it was massively more volatile back then.
Right. So your index that you're talking about right now would correct for that and then give you an oscillator that would make more sense.
Exactly.
looking in totality.
Exactly. And the way I do that is I measure volatility on a daily volatility over an annual rolling window of 1 year, and then over time we see that volatility goes down on average, but also even within every cycle there are differences. Like as we get close to the top of the cycle, volatility is a lot higher. Day after day, too much fluctuation happens. But I love the bear markets because they are so predictable, so stable. You don't get you don't get emotional adrenaline jumps. The
Yeah.
price is like a lot less volatile. So, but yeah, on average, cycle to cycle, it goes down, and it's actually a good thing. There are a lot of the volatility itself is a barrier to a lot of people, and we've been at 70, 60, 50 to 70 range for God knows since the end of Q1, because that's exactly when the top happened. Like after all these ETF investors, I think, rebalanced, and some tried to cash out, and then the price was weak, and we've been within the same relative range for a long time. We didn't go from 70 to 40 all of a sudden, right? So that's great. I think that brings in a lot of interesting, a lot of more conservative investors.
So does the financialization of Bitcoin and derivatives and synthetic options affect the power law because they can affect price without having the underlying asset?
Yeah, I love this. I love these questions because they are common ones. So a few things. First of all, power law, if you run it, it has been explaining the price since it was a cent. Or less than $1 all the way up to now. So it has already modeled all gigantic changes, gigantic events that has happened, all the black swan. It's already in there, right? And say appearance of the ETFs, appearance of MicroStrategy, COVID, all those on the other way, on the downside, FTX, Alameda, Luna, what was it? Or even you can go back to the older exchanges.
MTGOX, Bitfinex.
Yeah, exactly. All of them have been included here. So another massive event like a nation state adoption, or another nation state adoption, or something like that, still wouldn't kind of. I'm not expecting it to significantly change because that's actually part of the plan. Like, how would Bitcoin go from 60K to 600K? How is that possible? Well, one of these huge white swan events must happen, right? One MicroStrategy got us, I don't know, from lows of COVID to much higher. Than was Tesla. Then was all the COVID stimulus. It was a lot of money that took us from 10K to 60K, right? So another massive thing must happen to take us from 60K to 600K, which if you extrapolate power law model, in I don't know the numbers, but something like 5 to 10 years, we are much close to a million. Okay, so that's not going to happen automatically, right? The massive events must happen. So it's already kind of part of the model, right? But like I said, I always consider like a 20% chance that any model fails. So who knows? Maybe some gigantic event happens and totally changes the game. Maybe aliens come to Earth and say we want to adopt Bitcoin as our interstellar currency, and that breaks the whole power law curve, and we go on something else. So obviously that's a crazy example, but I don't say it's impossible, but for now that's my best, because I think in probabilities, right? In probabilities, you see everything is possible, but there's just a few things that are slightly more possible, right? So the model says this trajectory is the most likely, but it doesn't say other trajectories are not likely.
So I think we have our clip here, which is you're predicting aliens are going to come to Earth and adopt Bitcoin, and we should all invest before they arrive. Which we like aliens on the show, so I like that theory. I just want to say,
We just have to confirm that all these block propagation and network gossip works as intended outside of Earth. But if that works, why not?
But what if aliens are like big blockers?
I don't know. I don't know.
Do we still want
Well, they can go on their own alien cache or something.
Yeah, exactly.
That they might. That's an interesting one.
Yeah.
There's always a question of if the Bitcoin could expand to Mars even because of the block time. But anyway, let's make it interesting then with the predictions, because I think you've laid the groundwork for in a nice, clear, simple way how the model is. Both speaking of the increase, perhaps with this cyclicality coming, as most people suspect, at the end of next year, but also the decrease after that, because we've had, pretty much typically 75 to 80% drawdowns every 4 years, a period coming after that, a year or so after. What are you seeing? Of course, with the caveat that this is a model and everything else, both on the way up and on the way back down. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe.
Yeah, so let's see. A while back, I did a post that says, "What are the likely scenarios for getting to 1 million?" And the earliest, and that's when you get a significant bubble, was 2028 by extrapolating this model. So at the higher levels, 2028 or slightly earlier, that range of time is the soonest you can expect 1 million. The worst case scenario, it takes us back 4 years later. So 2032 would be the latest that the power law curve would get to 1 million. So how many years is that? 6 and so 8 years. So 2 cycles later, we are there. Of course, there are people who say we will go there immediately next day, or I think Plan B's model already has 1 million in a couple of years later. But we'll see. I love if that happens, but just think more realistically how much money needs to be come into the network, and just ask yourself, where is that money going to come from? It's a slow process, right?
Yep.
There are just so many people that have no idea what Bitcoin even is. One by one, they have to know about it. They have to change their mindset. They have to reallocate, and that takes some time. But the good thing is we have no indication that that's not happening. So we are on the right track.
And the 2028. So you kind of did 1 million there, which I think is interesting. Interesting way to look at it. But you are still seeing a peak at the end of next year, right? And that would be much less.
That's a lot. Honestly, that's a lot harder, because the model I have in mind is that the peaks don't necessarily repeat what they did in the last cycle. It's more of an emotional explosion. So when that happens, hard to say. In the previous cycles, a lot of that explosion was precipitated by the halving, because halving was the biggest supply factor. You cut miner supply, which was huge, and that's basically equivalent to a massive buyer coming into the market and buying every single day. So it might not have, and actually, as the data says, it didn't have an effect immediately, but the buyer is buying every single day. So after several months, after 6 months, and inventory goes down, Bitcoin gets short, and a lot of people realize that price is going up. So then that also brings in a lot more people and then we get into a bubble. Now, these days, miners are a lot less important. ETFs have been 5 to 8 times more important in terms of the magnitude of the movements. Another, like you said, another massive buyer, another sovereign adopter, they can change the game. And so having is getting less and less important. So it's all about when that emotional explosion happens. Maybe Tesla, comes up with another gimmick to integrate Bitcoin with their services. Maybe Apple comes out and says, "Hey, you know about Apple Pay? We're now integrating that with Bitcoin." And then from now on, everyone that has an iPhone, they also have an automatic Bitcoin wallet. Who knows? But when it's triggered, you can exactly see it in the model. So when Bitcoin is growing much faster than it's implied by the natural growth in the model, then you see a bubble is beginning. So I'm not super interested in kind of timing those cycles, but it's possible to see them as they're happening.
Yeah, I like it, Sina. That's very clear, concise info on the power curve, which we were hoping to get to today. Listen, I want to be respectful to your time, and we're gonna cut it here at the top of the hour. But as we do, what else do you want to leave our listeners with as far as your newsletter goes? What else you're doing about quantitative research in Bitcoin?
Yeah, so one thing you can do is if you like more of quantitative content, and I promise it won't be long monologues by me. We will always have interesting guests like yourself. You can follow our YouTube channel. It's just 21st Capital on YouTube. You can't miss it. We just hit 1,000 subscribers, and we only began 2 months ago. So we are getting a lot of love from the audience. Join us there, and even leave us comments to explain what you like to hear later. But even more exciting, on our business side at 21st Capital, we are launching a new custody method. I'm not going to disclose all the details because it's just coming in a few weeks. But suffice to say that we are offering a more advanced multisig custody that's going to make inheritance and backups by default on the blockchain. So essentially, you create a multisig. The concern is, what if you lose your keys? What if you mess up? What, too complex? Well, this scheme allows you to include a backup. So everything is lost. A while later, all your money is accessible and moved to a backup address. So the keys you have there would kind of retrieve your money. Similar thing works for inheritance. If you die, no one else figures out what to do with your multisig. Well, after some predetermined time lock, the money will be accessible to another keys that might be held by your heirs or your lawyer and things like that. So that's going to just add a whole lot of a whole new layer to what we could previously do with multisig. So if you just are interested, go to our website 21stcapital.com, 21stcapital.com, and then from there you see nothing other than a wait list. So you can sign up there and wait for our announcements.
Yeah, love that. I've always said multisig is a superhero. It's a superpower. Makes one a superhero, and people should definitely utilize it the best they can. And with Taproot and everything, it's just getting more incredible. Listen, Sina, thank you so much for joining. Thank you for the information, and I look forward to talking with you very soon on your channel.
Awesome. You're doing a great job with this show, and I was honored to be a part of it.
Thank you for joining.
Thanks, Sina.
Take care.